Hello, TFT traders. I'm Josh, and we are going to be doing some live coaching sessions today. I've got Brian here, and he's going to lead the way. We think it's very important to have a team with you to trade, to help give you direction from the outside, because sometimes we get in our head, and that's not always a good thing. You get stuck in a loop, and no one's there to break the loop. So it's good to kind of talk out what your strategy is, what you're doing with it, how you're planning for the day, and just wanted to give you guys a little taste of what that looks like with the TFT team. So here is Brian. Brian's going to lead that out. I'll let him take over.
Hey, everybody. Well, hopefully everybody's having a great day of trading. So we're going to talk to two different traders today. First up will be Greg, and then it'll be, and I'm going to butcher her name, but Zeri will be the second trader we talk to. So generally, we offer these coaching sessions, and they're really geared towards the trader's needs, because each trader is going to have different struggles, and there's going to be different strategies to approach what's going on with that particular trader. So if the trader is dealing with like some FOMO, or if they're going on tilt and stuff like that, I have different methods to try to help that trader. You're not going to fix all your problems overnight, but trading is very difficult. And the reason that is because you get a lot of positive reinsurance on really bad behaviors, and then a lot of negative reinsurance on really good behaviors, right? So you got to really disconnect from the P&L and be more driven by process. So what we can do is we can go ahead and get Greg in here, and then we'll kick this off and get this going. Raj is here. So, yep, there is Greg. Welcome, Greg. Nice to see you.
How's it, guys?
Good. All right. Well, so the way we should probably start off is maybe a little bit about, and this isn't normally how we start in the standard coaching sessions, but how much experience do you have trading? What type of trader you are, and what I mean by that is, are you more like systematic approach, or are you kind of a little bit of a mix of systematic with intuition? And are you a scalper, or are you more intermediate? And sometimes swing traders may end up in our platform, but because of margins and the way we handle accounts, swing trading is not necessarily an option right now. So I'm assuming you're one of the two different styles that I've mentioned. So if you could kick off with that info, that would be great.
Yeah, so I've been trading about a year and a half, going on 2 in May. I have tried everything, being a new trader. So, it's always like you try to find something that works for you. I did get like a mentor in the beginning, but that was more suited for CFTs, like more swing trading, holding the trades for a lot longer. But I found that wasn't really like my style, because, like the whole trade management, like, it's, when it comes down and goes up, and, your, as you say, your P&L moves around a lot. That kind of wasn't good for my nerves. So I look for, I wouldn't say like scalps, but my average trade is between 15 and half an hour, 15 minutes to half an hour. I've recently found something that works quite well for me. But unfortunately, like one of the reasons why, like I joined this or wanted to do this coaching session was it's like, FOMO. I wouldn't say FOMO. It's like revenge trading, or you get on tilt. Like this morning, when we show charts, you'll see that I got caught, pre-market, and it's kind of, you start off the bat with a negative trade, and then you're like, okay, no, but I'll catch it up on the next. So yeah, like this morning I got caught. I got caught a bit here before market started, and then I got a second one at market open.
We'll dig in to the trades in a little bit. I just kind of want to, and you really touch on some really important points. As a beginner trader, you're gonna test everything, right? And you're gonna find all these exciting strategies, and you're gonna try, and you're gonna like, yeah, this really works. And then 2 days later, it stops working. You're like, oh my God, this sucks, and I hate it. I'm gonna go try something different, right? And you keep doing that until you figure out, like, hey, no strategy is perfect. Every strategy you're going to have drawdown periods, and some strategies don't work in certain environments, certain markets, right? Rotational strategies, that would be more like reversion stuff, is going to work great. But once you get into like more of a trending market, mean reversion strategies are not going to work very well, right? You're going to get run over, right? Just like trend strategies aren't going to work in a range bound market, right? So you have different time periods, different market conditions that play into your setups. So for you to kind of experience and try different trading styles and understanding you as a trader, you have a hard time holding trades because of the up and down, the tick by tick, you get focused on the P&L. Absolutely. Like lots of traders find that very difficult. I'm one of those. And that's why I've developed a method where I'm a position trader, right? I get into a trade, I take one entry, and I have a position I work around. Meaning once I'm in the trade, either one, I start scaling some out as it goes towards target. And then if it pulls back and I'm able to add back in, I add back in the same risk that I took off, right? And it allows me to catch trades, and it makes me feel comfortable when I feel like I'm covering my risk, right? So that's what works for me. Not to say that's going to work for you. So right now you're a scalper. And if you're scalping, sometimes it's tough because there's not enough clarity in scalping sometimes, where the scalpers kind of has a plan, but it's not a plan they could literally explain to a 5-year-old. And is that something you could do, you think, with your particular setup? Like, could you sit down and build out a how-to guide for a 5-year-old that a 5-year-old could follow?
Yeah, I think I could, because
Okay.
I have from my mentor. He, if you can share screen, it basically shows like entry rules. So I have got this that so I've got 3 different strategies.
Yeah, and you don't need to share your
toolbox.
strategies because those are very personal to you. So it's not really about the
Yes.
strategy. What my main question, what I'm trying to get at is, are you following the strategy to the T, or are you deviating from it based on maybe emotional reactions? Like decision making isn't always logical. Sometimes you're doing things based on emotions instead of what you should be
Probably
doing.
emotions. Yeah.
Okay.
I think like one of my um, big points is like in the market open, you're like, okay, it's moving, and then there's some days that it moves a lot, and then you're like, oh shit, I've missed that entry, or one of my favorite entries is the opening range breakout, and there's days that it just rips up or rips down, and you're like, oh shit. Oh, sorry. uh, you know, it's very you. I wouldn't say FOMO a lot, but it's like, okay, it's gone, but can I get back in? So I've added a lot of confluences, additional like things where it's, yes, it might break out now, but it will retest. And that cuts out a lot of my losers, which helps a lot. So, yeah, as I say, adding a lot more confluences has helped me in cutting out bad trades that I feel like, oh, I've missed it. So a couple of points here and there, I'll be okay. But then it turns around and I get caught out. So
Do you have back testing data for your strategies right now? Have you back tested? Do you know what the metrics are for that?
yes. So I have been using it's called Edgeful.
Mm-hmm.
So they provide all that information on breakouts for orb and initial breakout. I mean, initial balance the first hour of the day. So it's I haven't been logged in, but it gives me all that information. But it's more now the actual getting in the market and using that information. You can have all the information, and for example, 60% of the time it works on a Wednesday for the opening range breakout. Then you're like, okay, you've got that confidence, and yeah, so I've got probably about 3-4 months worth of back testing, or live, what's it called, forward testing, and yeah, it's I would say I'm about a 50% at this stage. It's very hit and miss, but
okay, so your win rate's about 50%, right? How many different strategies are you trading? And I understand what Edgeful is. It's a really great platform. It offers a lot of insights, but that's not a strategy on its own, right? That's just a piece of the strategy, and maybe it's providing a trigger for that strategy. That's where you need to come in and collect that data and then do the back testing, putting in the work, right?
Yes.
And you got to look at the market in a way that it's a framework where you look at the market every single day the same way. Because if you don't have consistency in the way you look at the view and look at the market, you're never going to find consistency in how you execute, right? So that would be a suggestion that I would make is, one, when you're back test like at least a year of data minimum. And while you're back testing, see if during those back tests, you're able to identify the setup and clearly place both your stop and your target, and it makes sense, right? Not just the win rate, but also what you're risking R-wise on those setups, right? So there's going to need some work there. Now on your forward testing results, yes, you might have a 50-50 win rate, but what are you risking, and what's your reward? What's that balance look like?
So I'm currently at a 2-1.
Okay, so 50% 2-1. Now, are you finding that your errors are eating into that 2-1, or is it generally pretty 2-1, or?
It's when I don't stick to my plan, and then that kind of eats into my 2-1. But if I do my A plus setups, it's between a 2-1 to a 3-1.
Okay.
And
so you have a profitable strategy. That's not your issue. So now we need to dig into the meat and potatoes of what is actually going on that's creating this tension, this emotional charged decision making. And so far, what I've heard is you definitely have some type of attention related to missing trades, right? So you've now built some type of confluence system that helps alert you so you don't miss these trades. Now, on the orb breakout, if you notice the overnight market was very volatile, I would recommend keeping an eye on some type of ATR, rolling ATR, either volume-based, time-based, shorter time period, so you understand how high the volatility is, because that's a precursor if the market may move quicker that day, right? Or pending news, right? Those are all things you should be keeping an eye on. What other things are you struggling with? Like, can you put your finger on what it is, the biggest thing that's kind of set you back as a trader?
Probably keeping my emotions checked when I make losses. It's
Okay.
It's like a revenge trade. It's like, okay, so I missed. It's going. For example, you enter long, and then it just dumps, and then you're like, okay, so it's going to keep on dumping, and then you kind of just switch over, and then you try and make that up. And I find, yeah, I start going like 2-3 trades, and then that one switches, it exhausts itself as a short, and then it starts going long, and then you're like, oh, I need to get back in. And
really common, lots of traders do it. It's flip-flopping and it's revenge trading.
Yes.
So you're not alone in that. Lots of people do that. So I have a strategy that's going to help you. It's not going to solve your issues, but it's definitely going to bring things into light, right? So being that you're a higher frequency trader, you're a scalper, you need to understand that when things are great, they're great, and you're going to kill it, and you're going to feel really in tune with the market. But when things go bad, you're going to have a tendency, because most people do, to want to press harder, to make that back, to fix the issue that you created, right? But that's not the way it works. And I think you're an engineer, or you have some background in problem solving, right? The issue is you can't solve the problem by taking another trade. You're outside of your trading plan. So here's what we need to do is, once you start your day and you take a trade, either if it's a winner or a loser, I want you to get pen and paper or whatever you use to journal and start taking notes of your body, right? I want you to close your eyes, go from the top of your head to the bottom of your toes. I want you to notice everything. Were you holding your breath during the trade? Were you leaning into your desk? Were you gripping your mouse all crazy, right? Were you breathing rapidly? Were you hunched over? Were you leaning back? Were your shoulders tight? All those things that come into play that you as a trader can identify, because you need to be self-aware. Why that's important after every single trade, losers and winners, is you're going to start finding nuances in your body language. And those nuances are precursors for when you're losing your logical thought process and transitioning to emotional thought process. And once you've gone to emotional, I don't care who you are, you're going to make really bad decisions. Like, that's me, right? For me, through doing this, basic, it's like a data analysis of yourself. By doing this and approaching it very systematically, I know that after 2 trades, I need to get up, go for a walk, make a sandwich, do something, and inject logic back into my thought process. And then, only then, can I sit down and do another reassessment. If you don't cut yourself off once you start feeling those emotions, it's game over. In most cases, you're lost, you're gone, right? I don't care who you are. You're not going to be able to just be like, oh, nope, I'm done trading. I'm emotional, but I'm okay. No, it doesn't work that way. Once you're pissed, you're upset, it's like, no, market, you owe me money. That's what it is, right? But that's not the way it works, right? You gotta do the process of documenting your emotions after each trade, winners and losers. Because for me, if I really start killing it, I get like this excitement, like I'm oh man, I can take every trade. And then I start thinking I can like take a short where it's not really a short, and just like start really killing it. And it's like, no. I just get into bad trading, right? So I know as well, after a series of about 4 or 5 winners, the emotions are different. They're like charged differently, right? There's positive. So it's much easier for me to snap out of them. But I still get up, I go for a walk, I take my dog out, I do something to interrupt myself. I get off the desk, right? That's very important, and I think that's a really good starting point for you to start working on identifying it before it actually becomes a problem. Because once it's a problem, once it's initiated, you're not going to be able to get out of that cycle. It's too hard. Oh, Josh, if you're saying something, we can't hear you.
Let me jump in there too. Because Greg, so I'm a software architect of 20 something years. So I come from the same place you did. It's there's sort of like the technical problems, and then there's when you're pissed off at your computer, and you can separate the two. And you're like, if I just keep working at that technical problem, I'll fix it. I'll stay up all night. And that takes control of us, especially as engineer-brained people. So what you got to do is what Brian's telling you. It sounds like, well, that's not really part of the problem. Like, the technical problem is the market and the strategy, and that's definitely a huge chunk of it, no question. but start
Yes.
taking what Brian's saying and the process and journaling, all the stuff that sounds boring and like not about making money, and make it part of the technical problem. You are part
Yes.
of the machine, you know?
Yes.
You gotta do that stuff because it's really gonna make you realize and be a lot more self-aware when the trade's actually happening. It's gonna make a big
Yeah.
difference.
I think like one of the cool features that Brian was showing us before in the green room, that you can actually start journaling from whilst you're in the trade.
Order field.
And basically that, I think, is a game changer and will help because I can start because after the trade you're either euphoric because you've succeeded, or you're you know disappointed or um, upset with yourself, and like if it's a loser, you're like, I don't want to actually write this down. But if
Right.
you're as you're starting this trade and you're like writing, okay, this is why I took this trade and how I took, what I was feeling, I think that would help me a lot going forward.
Yeah,
So yeah.
for sure. A lot of people don't want to wait till later and then they've lost the context later when they're journaling. So doing it
Yes.
as soon as you can, close to when the emotions are happening, is super important.
Actually, one of the main reasons we felt this was so important is because, look, I've had TraderSync, I've had TraderView, I've had all of those journaling programs. And here's the thing. If I had a bad day, I would not journal. I wouldn't do it. I'd be like, nope, I don't want to be reminded of how messed up I was today, right? When you're in the trade, as soon as you take the trade, the only thing you need to do is just tag your setup. That's all you got to do, right?
Mhm.
Tag your setup. The other stuff is great, but the really important thing is tagging the setup, because then if you look at the screen, you can go into the reports and basically look at what the setup is doing, right? You can look at the errors that you're making and you can have the statistics to give you an idea of what's actually going on. And it's so crucial to your trading to have this data, to one, for confidence, right? And for two, to identify issues that you're having and resolve those issues. But you nailed it on exactly why we thought real-time journaling is so important. Is because, look, when you're emotional and you're upset and you had a bad day, the last thing you want to do is take 2 minutes to upload all your trades and then revisit that pain, right?
Mhm.
With us, while you're in the trade, you can talk about those things, right? Right here, felt some FOMO. I have, I held my breath. Uh, def felt emo, and you can do whatever you want, right? You can do whatever, or you can even go into your journal and have a running journal on the day where you're like, hey, trade one, trade one was great. Trade one, let's say it's short. Trade one was great. And you can do all that on the fly as you're working and as you're trading, right? And not only that, but guess what? When you start working on your journal while you're in a trade, after you've set stops and targets, of course, what do you think that does? It brings you in a state of logical thought process where now you're having to think, and it's helping you, quell those emotional thoughts and feelings and actions, and all. It actually helps you, right? So that's why we
Yes.
really put so much time into this, and Josh and Brandon just nailed everything in the journal. Like, it's crazy amount of work that went into it to be able to make it live and stuff. And I know people they really don't understand how important this is, and they really just don't see the value. But I can tell you, of the traders that I've met that are very successful and make really good money, they all do this stuff. This is the most important thing you should be doing. It's not the strategies, it's looking at your strategies, looking at you, inward reflection, self-analysis. All that stuff is really what's going to change you as a trader and make you very profitable. Because you probably have a profitable strategy right this second, but it's not profitable because you have things that you're having to deal with, which is very common for traders. That's why trading's so difficult.
Yeah.
So, yep.
One other thing I
I
wanted
think,
to,
oh,
you nailed it, I guess, with the tip. Well, you were talking about like sometimes I'm euphoric. and that's just as much of a problem. And I think the word tilt is often associated with, you're upset or you're angry, but tilted is really just anywhere left or right of center. So being euphoric or it's the same emotions. You're out of your mental space and you're emotional, and yeah, good. You get a good trade and you think, oh, I got this. I have figured out trading, and maybe today I make 20 grand and I get all my money back on, the 50 valuations I bought from some company, and
Yes.
it goes through people's heads every single time. And centering yourself, the only way you're going to do that is putting yourself as a human inside the technical problem, which is something you're not used to as an engineer.
Yeah, exactly. And I think you nailed it on the head as well. It's like getting okay, this is just for myself, but like that engineer grind, I can get this. If it's not this trade, I'll get the next one, and then you kind of get in that like I can fix this. I know I can fix this, and that's an emotion that needs to be in check. And with taking these journals and these live journals, and just taking that state of thinking from the trade, like, okay, I'm not trading, I'm thinking what I'm thinking. You like kind of shift your mental sort of like not your thoughts away from it, and then it helps you like, okay, no, I've actually made a mistake here. Let's just step away, like Brian says, and reset and get into a new thought, a more logical thought, not have emotions. I think, yeah, Brian was mentioned it, but it's like, it's a lot of beginners have that problem where it's, just keep on trying until you get it right. And so, yeah, I just feel like I'm getting some good benefits from just seeing this, and talking to you guys is awesome.
Yeah, trading's it's such a weird thing, because normally anything else in life, the harder you try, you see that feedback, that positive feedback from trying harder. Like, let's say you're an artist or you're playing guitar or whatever it is. The more work you put in, the more results you get out of it, the better you can do. The more effort you put in, the better you do. Trading's not that way. Sometimes the more effort you put in, the harder you try, the bigger the hole you dig, right? That's trading. And with other things, like when you put in a lot of time in art and you learn new techniques, you get to see that, right? But with trading, even though you're getting better as a trader, because trading is based on statistics and there's randomness in it, you can do all the right things, but then the market turns around and says, no, you deserve to lose $200 today. And you're like, what the heck? I did everything I was supposed to do, and I did it perfect, right? And then on the flip side, and I want to say I already mentioned this, but you could literally do everything wrong. You could add into a trade, you could average in and trade like crazy and really push and just make stupid decisions. And the market's like, here you go, here's $2,000, guys. And you're like, what the heck? And that's where that positive reinforcement on bad behaviors and negative reinforcement on good behaviors is so tough. And that's why, and I'll show you a screen right here. This is something that we really want people to utilize because it's so critical. And it's basically, hold on a second. Let me share this screen. Here. So this is kind of a routine, and I'll kind of walk you through all this real quick. But in the morning, this is very important to identify if you have any residual emotions, if you're feeling any certain way in the morning, like let's say you're angry from the day before, that can impact your trading, and you should be self-aware of that, because emotions really do impact your trading. Or if you're sleepy, and then you're going to find little nuances. When you're sleepy, you hesitate. When you're angry, you revenge trade, right? Then you're going to go into some more of the analytical data, which is like, hey, is there market news today? This is important because if you say yes and then you trade and you realize that you're in a trade during market hours, guess what? That is something you as a trader could avoid it, right? That means you could actually done a better job. And then market bias. This allows you to tag every single market that you're in to say, hey, today the ES is bullish. And then you could go back at the end of the day and be like, oh my God, I thought ES was bullish. I marked it as bullish and I tried to short the thing all day long. Like, what am I thinking, right? This gives you feedback. It gives you the ability to do self-reflection and really improve, right? You improve yourself and it gives you actionable items to do so. Then you go next. You have daily goals. You want to set daily goals. You can do whatever you want in these daily goals, and then you can keep track of them. It's all part of the process. And then at the end, it kind of tells you if you've made sure to, view market events, you've considered to set, progress and track those goals, and then you complete your daily checkout, right? Trade routine in the morning. Then at the end of the day, this is the one that's very important. This is what I really suggest everybody should be doing. At the end of the day, once you're done, if you failed to trade a trade, or if you failed to identify a setup or tag it, it's going to tell you when and where, and it's going to show you like a red box to say, hey, you messed up. You didn't tag this trade. And then you can click it, and you know what? I'll just go remove. Let me flatten this trade. Let me remove this one. And let me flatten it.
Order field.
So now it's not tagged. So let me go back to closeout day. And unfortunately, I started it. See, now it's saying, hey, one trade's missing, right? I didn't tag it. I took a trade and I didn't tag it. Now it's warning me about it. Now I click it and I say, oh, there's the trade. And I need to select the setup. There we go. Now I selected the setup and now I've tagged it. Now that warning is gone. It shows your behavior analysis. It shows all this stuff. Then you go to the next screen. This one's very important, right? As a trader, you do not determine where the trade's going to go. I don't care if you're a trading savant. You don't know the outcome of any one trade. Hedge funds don't know that. No one knows that. That's why some hedge funds are very successful and other ones aren't, because no one knows what the market's going to do. You have a prediction for what the market's going to do. You have statistics that show that likely it's going to do this, but you don't know that, right? So as a trader, the things you control and only control is the quality of setups, of course, how well you adhere to your plan, right? And you can grade yourself on this. And the point of this is grading yourself on things you actually control and which actually impact your trading, right? So let's say your execution, you did a really poor job, you killed it on your plan, you really followed your plan. Risk management, you killed it, you took only the size trades you were supposed to. You took, let's say $200 trades, and that's all you did. Emotional control, yeah, not so great, right? And then what it's going to do is it's going to give you a score. And that score, once you're done, will show up on your calendar. And now, instead of looking at the P&L on the day, you can look at what your score was. And now you have a better metric to grade yourself, to work on those metrics, work on things you actually control as a trader. Because look, I can give anybody a working strategy right now, and they wouldn't be able to trade it and be profitable for a multitude of reasons. One, it doesn't fit their psychology, because look, if I give you a strategy that happens only 3 times a month, and it's a 42% win rate, and knowing statistics the way they work, that potentially you could have 8 or 9 drawdowns in a row, right? 8 or 9 losses in a row, but it's a 5-hour trade. I could give you that strategy right now. Could you trade it? Probably not, because you have to realize that you could go 9 trades in a row, and then finally when the trade works for you, you have to have the ability to hold it to target without cutting it short. And a lot of people can't do that. And that's why it's so important, like you're doing now, discover who you are as a trader and figure out a trading strategy that fits you. And I can't tell you what that is until after you do that deep search and figure out what emotions kick in, when they kick in. Can you hold something to all the way to target? Do you have to change risk? Are you quick to set stops? Stuff like that. Those are the things that you can work on and you'll get better at, and you'll find a system that fits you as a trader. and it's really key to stuff. So, with that said, I don't want to have this go too long. We do have somebody else we want to bring in. Is there any other topics that you'd love to talk about, or any guidance that we can provide?
Well, I mean, like just with regards to the risk management, I think one of the things that's helped me is sizing down. It's gone from minis to micros, and it just allows me to, give my trades a bit more room because, ES and NQ are monsters that can move, 30 odd points this morning just in the news. Or not even with the news, just because ES moved.
Yeah.
With,
Generally,
24.
and this is different for everyone, but what I've found to help deal with volatility, I don't like to trade the first 30 minutes. Not to say that you have to avoid the first 30 minutes, but this is my reasoning behind it. In that first 30 minutes, I will look at ATR, a rolling ATR of some sort, either volume-based, which generally is determined from whatever the overnight market conditions were, and then I'll figure out what that ATR is. Because look, if you're using a 2-point stop every single day on your strategy, unless you backtested it that way, you should be adjusting your stop for volatility, right? Because a 2-point stop in a very rotational market is just fine. But in a really volatile market, a two-point stop is not going to work. It's going to get hit. You're just going to get stopped out immediately because of the volatility. It's moving too quick, right? So keep that in mind. And with all those different things, looking purely at stops, you've got to back test with that. And if you back tested the way you back tested, then use whatever stop you've developed. But sometimes that's probably why you're seeing the volatility, and avoiding the first 30 minutes is also helpful, and also avoiding news, because news events can really, mess up your strategy. It can basically just make it a loser, and you are going to have losers with your strategy. Right now, if you're 50%, 2R, that's great. That's very profitable. Now you just got to kind of work on the small things. You got to work on yourself. You got to work on not making those big mistakes that eat away at all those profits that you make. And you got to not focus on the P&L, but focus on the process of trading, because that's what you control.
No, exactly. And I think just seeing your screen there, the progression, you highlighted one of the features where it's like if you have this data, you can see like which days your profitable days. And I think that, like you say, once you've got this data available through your journaling, it will help as well.
Yeah. Here's the thing: is the tools that we've provided with our firm are game changers for traders if they use them. But a lot of people don't use them. They don't see the value. And it's like, if you have data and all I need you to do is tag your setups, that's it. And it takes like literally 2 seconds to tag a setup, right? Either one, it's an actual planned setup, or two, it's not a setup and you're just randomly trading, right? And once you get that data, you can go into our system and use our trade simulator and look at how things impact your trades, right? Unfortunately, my data is not great because all my trades are just winners and they're random trades. But right now, right? So just every trade. But if I only traded my gaps, you could see, hey, I would actually only have 800 profit, right? Instead of whatever the profit is up here. It's like 14, right? So what it does is it allows you to filter out bad stuff, filter out your bad habits, and look at how those would impact your P&L, right? And really dig deep into, okay, well, if I only trade the ES, what does my data look like? If I only trade my gap setup on the ES, what does my data look like? And it lets you project and show you what's possible. So like, for instance, if I had a bunch of mistakes and I was all over with my P&L, and then I filtered out like, hey, I'm not trading anymore at 9 o'clock or something like that, right? And then all of a sudden my win rate jumps 10%. Like, that's a 10% increase on your win rate by just filtering out the open. right?
Yes.
That's where this is so critical. Just the data and the analytics. And then on top of that, the journaling and knowing and being self-aware of those emotions. And you can tag those emotions. You can tag the FOMO. You can tag, the revenge trades. You can do that. And then you can see visually where your P&L should be. Another great feature with us right now is if you believe you have a strategy that's going to be beneficial and it's going to work, you can trade in our practice account and forward test that strategy. You're not risking anything. You're paying $19, and it's basically the cost of like a journal. Actually journals I want to say are $40. So it's half the cost of a normal journal, and you get data, and you get the full analytics suite, and you get all the journal, and it's automated. Like, it's a huge win-win for people that are trying to forward test. And if you mess up the account, no big deal. You just reset it. It's $2, right? And if you pass it, we're trying to incentivize good behavior. If you do the work and put in the work and you forward test and you find out that the strategy is working really, really well, then what's great is we give you the biggest discount we can on an assessment, right? The biggest discount we offer. And you get that as a reward for putting in the work and passing the assessment in the test environment, right? And then you could really work towards getting a live funded brokerage with us where you're actually in a brokerage account, either through Dorman or something like that. So anyways, we'll go ahead and move on unless you have any other questions, Greg, or anything else you want to talk about.
Thank you very much.
Okay, great.
Really
Thanks so much for
it.
your time. Really appreciate it. Shoot Raj a DM and we'll get you all set up, okay?
Awesome.
All right. Cool. And so before we start the next person, I want to thank everybody for joining us today. We're going to go ahead and get through some of the comments. Raj is going to put those up on the screen, and I'm going to let Josh answer some of those. Yes, I've voluntold you, Josh. Have fun.
Yep, sure. For an account with 1K drawdown, how many micros should I trade? It really depends on your strategy and how much risk you want to take per trade, how many trades you typically take in a day. I would always look at the props daily loss as an emergency stop. So I wouldn't stop at 1K. You don't want to hit that wall. If you're hitting a wall on your daily loss and you're using that to actually protect you every day or to stop you every day, and that's, oh, look, I hit my daily loss, I'm done, then you probably didn't plan the risk on your trade effectively. So think in those terms. But yeah, it's totally going to depend on your trading style. What account size we get. So we don't have any specific account sizes. We don't do any of the 50K, 100K nonsense because that's not really what they're giving you. We start everyone at 0, but then we have a plan builder that's really cool. And with the plan builder, you can just decide how many contracts you want, how much drawdown. Do you want to end a day or static account? And then when you go live, we put that risk into an account, and all the leverage is in a master account that we have you connected to. So you can trade all the contracts that you are given. Yep, so here's the plan builder. Pick your platform, your drawdown type and amount, the number of contracts, and the amount of days you're willing to give us during the assessment. The more days you give us, the cheaper it'll be. It'll just take longer. So choose wisely, and if you have any other questions about that, we are on support, happy to answer. What would you advise someone who is emotionally numb to be aware of? I would say being emotionally numb, you're probably willing to let it run against you and in a bad way, not worry or care about the repercussions of what that's doing to your account. And I think I was mentioning it earlier, tilt is tilt. Whether you're angry or happy, you're not centered where you're only making decisions. Again, if you're emotionally numb, that could be a good thing if you could just act on your strategy and not make decisions based on your emotions. But I'm assuming you mean it in a way where it is affecting your trading because you're disconnecting from what's happening on your screen and you're becoming numb from it. So yeah, you got to snap yourself out of it, but you got to wait. You can't wait until that emotionally numb feeling kicks in and you're not doing anything. You need to see the signals in yourself. Just like if you're playing poker and there's a tell, you're giving yourself tells all the time. Brian mentioned, squeezing your mouse or leaning forward or sweating or tapping the table. Like, you got to recognize that stuff early and go, oh wait, I'm tapping the table. Usually when I do that, I'm stressed, and that means I'm going to be making bad decisions. So come up with an action plan. I tap the table, whatever your tell is. Have an action plan to, okay, when I'm tapping the table, I have to get up and do push-ups. Like, do something positive with that energy, and then come back, based on that action plan. I wish the TFDX wasn't a pop out. Okay, it would be nice to go direct. You can go direct to the Project X platform. If you open up TFDX in the desktop, you'll see at the bottom left corner, there's a cell phone icon that's gold. If you click that, it'll walk you right through using it on mobile or directly. Pull up the next one for me. Oh, he's going to show us. Cool. Yep. You got to take off the question, but yeah, you'll see it right down there on the bottom left corner. He just clicked it. It pulls up a QR code, and he's going to need to change his password now. All right. Okay, cool. Perhaps go ahead and change your password. NinjaTrader Direct is not available. We are going to be announcing soon. I'll just go ahead and say it now. You can use ETP Trade Copier and copy. If you have an account, let's say you just set up like a free Tradeovate account, pay for a few dollars for the data. You can use ETP Trade Copier from NinjaTrader and copy to our accounts that way. We don't currently support NinjaTrader directly, but you can work with us with NinjaTrader that way. We're also going to be including a free license of ETP Trade Copier for those folks that want to use NinjaTrader, or just, we're really wanting to encourage traders that are already doing well, possibly in their personal account, to just, here's the tools, here's the trade copier. You're trading, you're trading on your own account. Might as well, increase your leverage and trade with us as well, and make use of your time. What to do after a losing streak? You can't. Again, you got to have a plan. You have to know what's a losing streak. Is that a multi-day losing streak? Is that multiple trades in a row in a single day? What does that mean to you? And statistically, where do you fall off? How many trades does it take where you have diminishing returns on continuing trades, where you're just, let's say you have 4 losers in a row, and you're looking at your stats and you're like, if I hit 4 losers in a row, then I'm destined to either continuing to trade to 8, 9, 10 losers in a row and blow my account. So maybe, and then I have just a very slim chance of recovering on that day. That's a good data point to have. So just be specific and monitor yourself as if you're the subject of the trade, not just the setup in the market. You're a part of the system. Is there a buffer for static drawdown funded account to get payout? All the accounts, you have to build the buffer first. So you pass the assessment, and then we put you in a sim brokerage account, unless you have very good stats during the assessment. We might actually pull you up directly into a live brokerage. But if you go into the sim brokerage account or the brokerage account, we want you to hit a profit target that's equal to the drawdown that you have. So it's just a 1-to-1. And then we'll move you into the brokerage, enable payouts, and you can withdraw from the buffer now. That's something new for us. You can do a full split withdrawal from the buffer. We trust the traders to make the decision. If you pass and then just say I want everything, we'll give you that, but we're probably not going to invite you back because we're not looking for you to farm our assessments for payouts without earning money in a brokerage account. So don't plan on doing that, but we trust you to take reasonable withdrawals from the buffer. What are your backgrounds in the industry? So I was a partner at a different prop firm in this space that's still running. They still put traders live, and the rest of my team also worked at that firm. I've been trading myself for 4 or 5 years. I'm a really good analyst, but I wouldn't say that I'm the best trader on the team. I still have things I'm working on, and honestly, a lot of the tooling we're built, we can really understand the struggles because we've all been there, and we built the software that we wanted to use, and we all use it every day. So um, my background before that is I've been 25 years as a software architect, and I am also the lead developer on the team. So everything you've seen was run by my department and built by my department, I should say. And I've built very large systems for federal, state governments, and law enforcement, as well as Fortune 50 companies for all for improving process and pulling stats out of it. So I'm very familiar with traders with problems, humans with problems, manufacturing with problems, law enforcement with problems, and helping to build software to solve those process problems. And I think that's this why TFD is so successful and is going to be continuing to be successful, because we're very development focused, and we don't have to reach out to some third party company to build our software. It's all in house and pushed by the executive staff. Hey Josh, what are the goals for the futures desk in the next 5 years? So we're trying to build a really good team of core traders. So because we're able to make this software that we think is, and we're seeing is having a really good positive effect on our traders and their performance, we want to use that obviously to get them into our accounts to trade our money. And the more we do that, we're going to start hitting limits with the amount of capital that we can allocate, and we're going to continue to grow that into maybe a fund or something similar to that as size gets bigger and bigger. And we're hoping this is a really good way of getting that talent pool to help us manage those funds. Right now, we're proprietary trading. It's our investments, but eventually that could change. Can you explain the current promo? 30% off, no setup fee. So setup fee. So by default, a lot of companies have, they'll say it's $30 to sign up, and then you pass and you pay another $150. We don't do that. You can opt into that if you want to pay less upfront, but by default, we don't do that. It's that one-time fee. Once you pass the assessment, we cancel the subscription. You don't pay any more monthly fees to us. We're still covering data. And then when you get to the brokerage, we will continue to cover one exchange of professional data fees as long as you're trading with us. And the only reason you would pay more fees there would be if you wanted additional exchanges. But that's negotiable further down the line if you are doing extremely well. Anything will be negotiable for our top traders. Okay, an important question example, like country like Germany, traders are not allowed to trade directly on a live account. Is it possible to have a demo and have payout there? No, unfortunately, it's just not our model. We are not interested in trading and paying out, more so just paying out in sim. We're trying to keep you in a simulated account for the shortest period of time, and we are a company that is striving to make as much profit as possible in live brokerages, and sim payout models put us against the traders, and because I think that's just how a business model works when you are paying out a sim, and we don't want that poisoning our model at all. So I'm sorry if you're in Germany and that's the case. We do pay you as, I don't know the German laws and for sure abide by them, but we do pay you as a analyst. So we don't pay you. You're a market analyst for us, so you can check with your country's rules and see maybe if that's okay if you are categorized that way. So can only buy one account. No, we allow two accounts, two assessments, and we don't want you to, we're not wanting you to farm us to get payouts. We're wanting you to have one, maybe two accounts if that works better for you, and keep those accounts, and we'll grow them vertically. We can increase drawdown, we can increase contract size. This is how it works in live markets. You're not usually. I know there's a lot of massive, crazy scale that you can't get in live brokerages with some of these companies, but that's not sustainable, and it's not realistic, especially the fills you get. And that would just be generating traders that are getting into live accounts and getting completely shaken up by how things are working differently and how their size is affecting the market. Okay. I ran through that pretty quick.
Yep, cool.
I'll let you take over again.
Yeah, just kind of to piggyback on what he was saying about max accounts. So here's the thing with us: when we're building everything, we're trying to, one, run a business, right? Two, we're trying to protect the traders from themselves sometimes. And what happens with a lot of these companies that let you sign up for like 20 accounts, right? Most of the guys that are signing up for 20 accounts, they're passing those 20 accounts. So all they're doing is they're increasing their risk by 20-fold, right? And then those same companies allow you to reset all those accounts at once, right? So you're talking about people that potentially, and I know personally, I've met people that spent, 15K between all their accounts and they got nothing out of it, right? That's just kind of, it's encouraging gambling behavior. You only need one account. In reality, you don't need a copy trade. Copy trading, just trading's hard enough to then add copy trading into that, which we allow it. I mean, I see a need for it, but we'd rather have you have like maybe 2 accounts, and then we'll just scale you in those accounts to grow your size, right? And kind of to touch on the whole, I guess, sim brokerage funded stuff that most of these other companies do. That's why you see these guys change rules all the time. Like, hey, we don't want bonds traders anymore. You can't flip trades. You can't do this. You can't do that. You have to record your trading and send it to us, right? Think about the bigger picture. The reason they're doing that is because they have a set of traders that are making money on them, and they pay out of pocket, right? They pay out of pocket to those traders that are making money. Where us, we're trying to be aligned with the traders. That's why we're providing really good tools. That's why we're providing free coaching. That's why we're trying to help everyone, is because we want the traders to succeed, because it's to our benefit, right? If they get into a brokerage account and we basically coach them and help them and back test with them and try to hone them into a better trader, we win together, right? Where these other companies, if they have a really good trader, they're like, whoa, hold on, how do we get rid of this guy? We need to cut this guy off. And that's why, like, some companies, after you're profitable and you get into a funded account, they say, nope, you can't have any more assessments, because they are gaming the assessment system. That's what they're trying to do. That's their intention. But most people are hurt by that. They're not winning big. They're just losing 20 times faster. Additionally, another thing that we did is we limit your resets, right? So if you reset an account, we know you're in an emotional jeopardized state of mind, right? Why are we going to let you trade again that same day? Like, it would totally make us a bunch of money. Oh yeah, great. But guess what? We came from a place, right, that allowed those resets. I've seen people lose tons of money, like 3K in one day. And it's like, it makes me feel sick to my stomach, because I'm like, that guy's not helping themselves. That guy or girl, right? They're hurting themselves. Like, that 3,000 could have spent on like a family vacation. Like, why are we letting people hurt themselves so bad, right? At the expense of money. It's ridiculous. And that was one of the things that you'll see with me and Josh, is like, our whole team actually is, no, we're doing everything we do is to try to protect traders, provide them the tools, and make things fair, right? We still are running a business. You have to understand that. We have overhead and all that other stuff, but we're trying to make everything where we're in line with the traders. We're trying our best to support traders through good habits, providing guardrails, a good support system, and prohibiting stupid, gambling behaviors. So that's kind of, I just wanted to touch on that a little bit, because I'm super passionate about it. And a little bit about my background. I know Josh talked about his. I was an investigator for 13 years. So I investigated a lot of sleazy stuff, right? A lot of financial stuff, financial crimes. Some of the stuff that took place in the industry, especially lately, made me feel sick to my stomach and want to do something about it. So that's why, when it comes to ethics and how we treat people and what we do, and the standards we hold ourselves to, we hold ourselves to very high standards, and we always do what's best for the traders. And not just me saying it, but look at what we've done, look at what we built, look at the rules that we have, look at the things that we're doing. And I challenge anybody, if you think we're doing something that's hurting traders, I'll come on a live, conversation with you, and we'll talk back and forth, and we'll tell you exactly why we did what we did, because everything we decided on decision wise, from the way the days work to the drawdown amount, all that stuff was back and forth and really based on what's best for the trader, right? We put a lot of thought into all that stuff. So with that being said, let's jump on to our next trader. We'll get her in here, and Josh, I think, can jump off for a little bit, or if he wants to stick around, that's fine. All right. Welcome.
Hello.
Hello.
Thanks so much.
Okay, so you've been here since the beginning, so we'll kind of start in the same area where, what type of trader are you? How many trades are you taking a day? Do you have any data for your trades? Do you know where you're at on your win rate? And what are your top major issues right now?
Okay. So I have been paper trading for 6 months, but I've been trading along with my husband, who is actually allowed to trade because he's in the Netherlands. So we've been trading together, and he actually got to a point where he got a funded account, but he wasn't able to take care of it, and we lost the account, for example. Uh, and so now there's like this back and forth of like what you said, like there's a lot of strategies and whatnot. He's always profitable in all the strategies, and whatever strategy he has, I adapt sometimes and make my own twist to it. It's profitable. But when you're in a trade, when you back test it, it's like it's fast. Like you can click, 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 and then you see where okay, you are right. But when you're in a trade, it's so there's this anticipation. Okay, where is it going to go? Like I know I am right, my analysis correct, but when you're in the trade, there's a lot of things happening, like, oh, should I take it off? And then sometimes when I take it off, it just soars higher. It goes to my estimated take profit. And then I also have this problem, both of us, wherein the stop is too small that we get wicked. And when we get wicked, and then it goes the direction that we were aiming for. And that's like, like, how do you manage that risk? How much do you allow? It's the things like that.
Yeah, so strategy hopping and kind of looking for different strategies is super normal for newer traders. I really commend you on staying in a paper environment. I don't know if that's by choice or because of restrictions, but
Restrictions.
I really recommend don't put any capital on the line with anyone, right? Until you have some type of structure, framework, something that's very consistent that you can look at. And you're very, very correct in the sense that backtesting is easy, right? Because you know what it's going to do, right? You're like, oh, this is easy. And, if I just do this, it's going to do this. But backtesting is one thing. Forward testing is another thing. Actually testing the strategy, because in backtesting, it's very easy to identify the setup. It's really easy to hold the setup. But you're not realizing hey, this particular setup would have required me to hold for 3 hours. What would I have done in those 3 hours? Would I have actually held the trade, or would I exited because I got fearful? This other trade went almost all the way to target, came all the way back to my stop, but didn't hit my stop, and then went to target. Would I have held that trade, right? Those are a lot of things that you're not going to catch in the backtesting scenario, where forward testing is going to show you how, in reality, one, you're going to be able to execute that trading style and setup, and two, if you as a trader are emotionally able to handle that style of trading, right? I don't know what the solution is for you. You're going to have to go through the process of, forward testing more, whatever the strategy is. What I can say is once you find a profitable strategy, focus on that one strategy, because when you start adding in 15 different strategies, or even 3 or 2, it just makes everything really muddy. And then you start mixing strategies and say, oh, this is close enough, but it's not quite close enough. So you kind of it's weird. You curve fit it for yourself, right? So with that, I highly recommend pick one that you know is profitable, stick with that one and forward test it and practice going through the process of taking the trades the way they were planned on, the way you back tested, right?
I was just going
And
to jump in real quick. Hey, Zero, do you have an account with us yet?
No,
Okay.
not yet. But
Let
my
us throw
husband
you
has been
over.
thinking
Okay.
about it.
Let
Yes.
me give you and your husband, if you'd like, a credit for a practice account, and then you can use our system to just forward test. You don't have to. There's no pressure to get an assessment, but um, you can try a practice account and use it to forward test and just journal and pull some
Okay.
stats out of it, and then just use it as you'd like.
yeah,
Thank
it's
you.
super helpful
It's really
to
appreciated.
it's super helpful to have that data and use it, and then we can actually set up another more private coaching session, and then we can go through your data, and I can find the little nuances and we can work together to hone your stuff. But to answer your question and kind of touch on what you were talking about before with like after you're in the trade, there's all that uncertainty and you don't know what's going to happen. And it's so much easier because when in backtesting, it's instant gratification, right? But when you're in the trade and
Mm-hmm.
you're waiting, you're like, oh my gosh, is it going to work? Is it not going to work? And it's so nerve wracking, right? But you got to get away from that mindset and realize you as a trader, you, regardless of how much you're hoping or wishing, it may or may not work. And that's okay. You got to consider yourself like a casino, right? The casino doesn't care if one guy comes in and makes a bunch of money one night because it's like, who cares? It's one guy, right? Same thing with trading. It's one trade. That one trade isn't going to determine or dictate who you are as a trader in the future, right?
Mm-hmm.
So what you want to do is focus on the process of the trade. Did I execute the trade correctly? Did I get in where I was supposed to get in? Did I take the proper risk for this trade? Did it meet all the criteria for this particular setup? And if all those things are yes, and you took the correct risk, guess what? That's all you can control in the trade. You don't control if it goes
Mm.
down or up or sideways or whatever. All you control at that point is, when do I take profit? When do I get out? And if you back tested and when you back tested, you didn't let the market moves interject decision making, right? It doesn't factor in. Then at that point, you have to realize that I don't get to mess with it after I set the trade. It's set, it's done. It's going to go where it's going to go, right? And when you
Yeah.
start focusing more on your process and less about the P&L, then you're going to find that it's not going to go away. You're always going to have those emotions, those feelings and desires to like want the trade to speed up and just be out of it because the uncertainty, that discomfort, the feeling, it's all bad feelings, right? You don't want to be in it anymore. You want to cut it just so you can feel good again, right?
Mm-hmm.
You need to basically, while you're in that state of mind, get into a journal and start injecting logic. And what I mean by that is you start typing or writing whatever it is that best fits, you. Sit there and start typing and say, like, for instance, let's say, let me jump in a trade real quick here.
This feature that you
Order
showed
field.
earlier is actually super useful because a few months ago when my husband still had the his funded account, um he I would say, "Oh, take it off, please. Take it off. Like flatten it." And he's like, "No, calm down. Do you see like everything lines up, right? You just hold. And then when you see it struggle, that's when you take it off." So there's for me, there's like this insane like I have to put logic in it. It
Mhm.
can't just be like take it off.
Yeah.
Uh
So that's what I was going to recommend. So let's say I'm in this trade now, and you either can use your journal or the trade tag, and sometimes it's nice to put it in the trade tag. So let's say I feel like I want to take this trade off. Logic, let's just say the setup is still good. All my rules were met. Uh, I am okay, and I just need to hold
One
right?
more thing
So
you can
I just
do,
need
and
to
maybe you
follow my
can.
plan.
Oh, sorry. I was just going to say one more thing you can do, and maybe you can show this off, Brian, is you can have actual rules within your setup. So I'm not sure what your exact strategy is, but for example, if you see a 3-bar reversal, you can get out early, but only if you see that. And this allows you to be a little bit more objective rather than just, oh, it feels like it's reversing.
Yeah. It's
Okay,
really
that's
a
pretty
good
cool.
idea. Yeah, it's really a good idea to have objective rule sets for when you exit, and those rule sets better be in place when you back tested everything. So if you're just arbitrarily making up rules along the way, it's like, oh, it kind of pulled back a little too far here. You didn't back test it that way. Don't trade it that way, right? A lot of people will back test one way and then trade it entirely different than the way they back tested it. And that's where you kind of get yourself into trouble. Another thing you can do, and this is something that is very beneficial. So before the market opens, close your eyes and basically visualize you taking the trade, right? Visualize you entering it, you have the perfect setup. And then, as you're visualizing, actually visualize it going up in your favor and almost touching your target and feel those raw emotions, right? Oh my gosh, it's almost, really believe it, sell it to yourself. And then visualize it coming all the way back down and almost stopping you out, right? And really feel that emotional roller coaster, right? And try to, while you're feeling those emotions, inject logic and be like, it's okay, the trade's working the way it's supposed to work, I'm going to win, I'm going to lose, it's okay, it's part of the process, right? This is still fundamentally a good trade, it's part of my setup, I need to hold this, and basically rehearse like 5 or 6 of these trades before the market even opens. And during that time, what you could do is, as you're in that visualization exercise, feel a sense of calmness, feel a sense of certainty, right? Do the reverse of how you normally feel and really push yourself to feel calm and feel like, hey, everything's going to be okay. And visualize yourself losing on the trade and being okay with it. Visualize yourself winning on the trade and being okay with it. And I know it sounds crazy and it sounds silly, but visualization is very, very helpful.
Yeah, I
There's
totally get this. Yes. It's kind of like removing ego from yourself and just let logic take over, like be rational about everything. Like whatever happens, happens. You did what you can do, and that's
Yeah,
what
it's
matters.
really easy to say it ahead of time, but in
Yeah.
the moment, it's very hard to get into that. So another thing you could also practice with is, as you're in the trade, as soon as you take the trade, start journaling. Start right after you have your stop place and your target place. Start journaling to describe your feelings and how that's not really true, right? They're just feelings, and it's not really changing what the market's doing, and your plan is still working, and that will help also inject logic and get you away from that emotional thought process.
Gotcha. Thank you very much for that.
Yeah, and it looks like Raj is showing a demo of kind of like the tags and how to set rules and stuff like that. So that's another feature that we have. We really want people to be using the tools, because these tools offer huge edge, and we hope everybody utilizes these tools all the time. Okay, and any other things that you're currently like? I think you mentioned stops. So
Yes.
I would recommend. Okay, so with stops, here's the thing: is most people think that one particular set of stops is going to work in every single market. It just doesn't, because of the way the market kind of goes in an ebb and a flow of, really volatile, not really volatile. And if we're in a range bound, tight market, 60 points or less, whatever market you're trading, you're in a really tight range, right? You don't need a big stop, right? Which means you can take more size. Or if you're in a very volatile market, let's say it's news driven, something's going on, then you're going to want wider stops, because you need that wider stop because of the volatility. So there's different thought process behind that, because look, if you've back tested with a certain stop, then trade it like that. Don't change it. Trade it how you back tested it. Now, if you didn't back test it with a certain stop, then I would recommend looking at back testing with a ATR stop of some sort or a VWAP deviation of some sort. So the ATR, what's nice about that is you can change it. You could be like, hey, I want a volume based. I want a time based, right? And then you're adjusting the ATR anywhere from like 15, 21, 30, whatever. And then what that's going to allow you to do is you're going to see it's going to spit out a number based on the volatility. And then you can decide what that stop should be. I want a quarter ATR. I want a half ATR. I want a full ATR as a stop. Now you're back testing that stop methodology to figure out if it would work. Then after you back test, you need to start forward testing to figure out to make sure that stop works, right? When you're forward testing.
Mm-hmm. Okay, that's actually very interesting because one of the strategies that we tried out was indeed with ATR.
Mhm.
So it's nice to think about that again because especially in New York time, market is really volatile compared to London, for example, or Japan. Okay, gotcha. Might figure out the strategy that
Yeah,
works.
as soon as you guys get to a strategy that does work, and look, every strategy is going to have lulls, right? It's okay. Like it doesn't mean it's a broken strategy. If you continue to look for perfection and like look for a strategy that never loses and sets up every single day, you're not going to find it. Like
Mm-hmm.
I mean, there's quants, there's hedge funds that are looking for this perfect strategy. Hedge funds lose all the time. Like you're not going to outperform a hedge fund. Like it's not going to happen. They still lose, right? You have to realize that losing is okay because over the long period of time, over thousands of trades, you're gonna win. You have an edge. You have to let the edge play out. If you're switching strategies and changing every time you lose, a couple in a row, you're never going to be profitable. And some of these strategies work really well in certain market conditions, range bound, breaking out, etc. Trending. Those are all strategies and subset strategies to those. Like you can't trade a mean reversion strategy if we're in a ranging market or not a ranging market. I'm sorry, a trending market, right? You're going to get run over. Like it doesn't work. You could trade a mean reversion strategy in something like a range bound market, right? Let's say we're inside of a pretty big range and you're looking to fade the extremes, right? That's going to work really well. So you have to identify, and that's through process, what type of market are we in, okay, and have a framework to identify that in a consistent manner every single day. And then taking that strategy and documenting and keeping records of it to make sure that that strategy is one still working, what the hit rate is, because a lot of strategies, let's say you have a 50% win rate, you think, hey, every other trade I should be winning, but that's not reality. I mean, with the 50% win rate, there's still a chance you could have 4 or 5 losers in a row. Does that mean the strategy's broken? No, it just means it is what it is. It's going to happen, right? So my suggestion is find one that works, back test it, and stick to it. Don't move off of it until you can prove that you can trade the strategy. Once you can
Mm.
prove to yourself you can trade the strategy exactly as it's supposed to be traded, you're not injecting anything, you're not taking more risk, you're not changing how you're entering, you're not changing anything. You're just trading the strategy in its purest form, and you proved yourself it does not work, then move. But don't just change because it stopped working for a week or 2 weeks, because there may just be a lull in the strategy. It happens. Like the opening range breakout doesn't perform very well in June and July. It just doesn't. Do I know
Mm-hmm.
why? I don't know. It just doesn't work. And those are the type of things you're going to want to basically work towards, and you'll find that through data collection. And you'll find, when your strategy will work best. Like I personally know that a particular strategy that Raj trades doesn't really work that well between 9 and I think 10:30. It just doesn't work. It's got a really low win rate. After that, it works really well, right? So that's where you come in and you look at the data and you make your strategy better by utilizing the tools.
Okay, gotcha. So it's collecting all the data from the trades that are taken, and then it's like, so there's this strategy and then you're getting all the data for that strategy, and from there you get to determine if it's profitable in live market or not?
Exactly, because it can.
Gotcha.
There's strategies that backtest amazingly, but the issue is trying to execute that strategy in a live market is super hard, right? Or there's other strategies that, like, I could give you one right now. It's 42% win rate, 5R returns. Here's the issue: if it doesn't meet your psychological ability as a trader, like if you're an emotional trader with a 42% win rate, you can have stints of like 8 losers in a row, right? If you lost 8 times in a row and then the time it finally worked, could you hold it all the way to a 5R? Probably not, right? Not many traders can do that. It's a very profitable strategy, but here's the issue: is it's very hard to trade, right? So it's not going to meet or fit a lot of traders. So you have to find a strategy that fits you as a trader, and that is a good strategy, and then all those things align, and then it makes it a lot easier for you. And that's the hard part.
Yeah. Okay. Gotcha. Thank you. Thank you so much for this. This is very valuable. Um, I do have a question though in terms of scaling. Um, like, um, is it is it okay to like say, when you enter a trade, you have one micro, and then when it pulls back, you go in 2 micros. Is it okay to put your, well, once you're in profit already by a certain amount of ticks or points, is it okay to put your stop loss to break even, or is it just really dependent on certain factors in the market?
That really depends on how you backtested the strategy. I don't know that answer.
Oh,
That's only
okay,
an answer that
gotcha.
you can let me know, because in backtesting, if you're adding, you should be adding at set areas based on something that stays consistent, like ATR, VWAP, Bollinger Band, something like that. Like that's an add point, right? Or let's say it's point based, like, or candle based, right? You have to have a methodology to the ads, or else those are random ads. And sometimes it'll work great, but sometimes it won't. So for me, what works best for me, and I'm not saying this is going to work best for you. For me, I like to get in all at one time because it lets me predict my risk a lot better than trying to do ads. Because if you're doing ads, you have to first determine where you're going to do those ads. Then you need to figure out what your total loss amount, your total risk is going to be, and add those ads at the right spot, right? A lot of times, what
Hmm.
people will do is they'll get in, they'll go against them, they'll add a little bit more, and they'll get lucky and it'll go back up, and then they set a break even stop. And this is the reason you set the break even stop, is because of the emotional tension that you're feeling. It's that, oh, I don't, yeah, I feel uncomfortable, right? And that comes down to a psychological thing, right? You're going to have to work past that. You're always going to feel that feeling. It's how you respond to that feeling. And that's where injecting logic and stuff like that is very beneficial and helpful. So with adding in like that, it can work, but you need to backtest it. And if it hasn't been backtested, don't do it, because at
Gotcha.
that point you're just kind of randomly adding in and you're hoping it works for you. For me, what works really well is I take it all at one time because I know what the risk is. And because of who I am as a trader, I know myself. I like to take profits in scales. I trade around a core position, meaning I'll take, let's say I take, 20 micros, right? I like to trade micros because I can scale in and out of those. I'll take 20 micros. It will go to my first target, right? Once it gets to my first target, I'll take 5 off, or 10 off, or whatever, right? And once it goes to that first target, I will decide if I want to add back in, if it pulls back. And sometimes I will, but I'll only add back in the amount of risk I took initially. So if I go up in it and I take 5 off and I get like 10 points out of it, and then it pulls back and I'm looking to get back in on that risk I initially took off, I'm only adding back in the risk I initially took. I'm never increasing my risk. I'm only reducing my risk and increasing my chance of where it potentially is going to go, right? And for me, it helps a lot with my emotions, because once I scale some, it feels like I've won, and it helps
Hmm.
me feel more confident in the trade, right? So then if it doesn't work, then I'm just getting out of that ad it doesn't change my risk at all, and I'm still holding my original trade, and it doesn't bother me. A lot of times what it will do is it will then make my next target, and at that point I don't add back. I'm just like, nope, I'll hold it. I'll scale a little bit more out. I'll scale what I just added back in, and then I'll let it go even further. And then I'll take the rest off and maybe hold a runner for like the home run play. But generally, this home run plays don't work out unless it's like a trending market, some news event or something like that, right? So that's my style. Is it going to fit you? I don't know. You need to put in the work and document how you feel and really get connected with yourself and be self-aware. And then once you get that and you understand what works for you, then a lot of those strategies are going to work a lot better because they fit your style of trading. Like whatever you trade doesn't necessarily mean that's going to fit your husband's style of trading, right? You guys are two different traders. You guys are going to trade two different styles completely. He may, and you mentioned this already, is you said he'll hold it and you'll be like, no, flatten it. You guys are two different traders. That's why he's saying flattening, you're saying hold, right? So understand that and don't try to trade the same system as him. Maybe the same strategy is fine, but you need to probably approach it a different way. And that's the way you should look at it.
Gotcha. Yeah, right now, we have two different styles right now. I don't understand yet what he has, and that's fine. Right now, my strategy is more of like point of control. Like I know it will go to the next point of control, and that works for me. It's been really good in like yesterday, for example. Um, because it did reach the target, but for my husband, his setup, he got wicked a lot, and he was like, what's happening?" But
Yeah,
yeah,
volatility yesterday was higher than normal, right? And you're going to get
yeah.
wicked on those days, and that's just part of trading. And sometimes curve fitting, which means you're just messing with your strategy until it's perfect, right? The issue is you over curve fit, and then it makes it where one, you can't trade it because it just never shows up, or two, you've curve fitted in a way that it's not tradable. Like you can't execute, you can't get in, you can't like. It's great hindsight, but in the middle of it, you can't get into it because it's just not clear. You don't have enough clarity there. For you, I would suggest if you did find something and it's point of control related, we're going to give you that forward testing account. Please utilize it. Get in there and tag your trades. And even if it's a trade that you took by mistake, tag it as a mistake. Make a setup called mistake, or make a setup called random trade or board trade or whatever, and name all your really good setups, right? And then the bare minimum, tag and set up all of your trades, because when you do, you can then dig into the data, and with the data it's going to give you that extra confidence to be like, oh my gosh, if I trade my point of control setup perfectly and cut out all this noise and all these dumb trades I took, I would be super profitable right now, right? That's what this gives you. This is the tools and what this is supposed to do. And this is why we as a team felt it was so important, because we all struggled just like everybody else. We still struggle. Like, we're not perfect, but these tools really give you the clarity to be like, oh my gosh, if I stop being a bonehead, then I could have a 70% win rate instead of a 50% win rate. Like, I'm leaving money on the table, and you're driven, by the money. And when you see you're leaving a bunch of money on the table, it really helps. It opens your eyes, and then that helps you with the emotional control and some of those other things.
Yes, gotcha. Thank you. Thank you very much. Yeah, it's very interesting, this whole trading journey so far. I've watched my husband too, because he he's on the spectrum, so he can't hold a job. So so when he found trading, it was really great because he didn't have to interact with people, and he's poured so many hours into this that he actually got a funded account. And now, as you said, he has been curve testing. And I'm like, dear, you're already really good at trading. What are you looking for? And he's like, I don't know, but I need to fix this. I need to figure out what works. So
Mm-hmm.
yeah.
Yeah, there's
You'll
different
get into that
methods.
phase of looking for perfection. You're never going to find perfection in trading. The market is too random, but there's there is strategies that are very, very profitable in the market, but the market is random. So looking for perfection, you're never going to find it. You're just not. Like strategies, you're always going to have losing trades. They're going to have losing cycles. It's just part of the game. And as far as being, where I think most traders are introverts, by the way. I think we're all like, we all like to be by ourselves. We don't, at least for me, I don't know. I know Josh a little bit of an introvert too, but trading is really weird because it is very, very isolated, and accountability is so important, and you're only accountable to yourself. So it's like this really weird journey. Like there's a group of traders, but you're by yourself, right? You're the only one really knowing what you're doing. So it's just a weird situation to be in, but it's a really fun journey. It's super hard. It never gets easy. You just get better at it, and it's slow and methodical. But you know, I think your husband, if he's still looking for perfection, let him know it's not there. And if he's already doing really well, just stick to what's working. Don't keep looking. If something's working really well for you, stick to it.
Can you hear me okay?
Yes.
Yeah, I just want to jump in on that just because I am very much come from an engineering background, and it's just human nature anyways to feel like unless it's the job's 100% done and I'm 100% correct, then I'm not correct. And it sounds like he's struggling in that space of, I could be better, I could be better, I can improve the strategy. And you want to do that creatively, but do it on the side. Like treat it like a sandbox. Like if you really want to improve the trading, keep it on the side. Don't let it change your trading day to day in a random way. Use the stats to make decisions. And again, forward test on the side, build up that information. But it's trading is such a strange thing because understanding that when it's not, it's something that doesn't work 100% of the time. And being really good at trading means knowing that it's not going to work 100% of the time and your decisions when it's not working. But yeah, it's all about stats. Try to get the big picture of your stats and really think of that during the day when you're in the trade. I know it's only like, you're in a trade for 10 minutes. So it's hard not to focus on, oh God, I'm red. I lost another trade. But take that 10-foot view of the whole process. And if this is something you're wanting to do long term, it's just another trade out of thousands in your career. So it's just another little blip, just like a day in your life. Tomorrow's a new day. Trade to live another day.
Mm-hmm. Gotcha. Thank you. Thank you very much for that
You're welcome.
advice. Yes.
Is
And
there?
he's actually listening in on the stream right now. So
Hi,
I could
husband.
see him like, yeah.
We're talking
I
to
could
you
see.
directly.
He's on a Discord call because we're LDR. But yeah, he's smiling. He looked like he got called out with all the points that you were
We
saying. He
all
was
we all
smiling.
do it. If I have a refrigerator problem, I'm going to be going to the hardware store over and over until I fix the refrigerator. That's just how most problems work. But imagine accepting that the refrigerator is only going to be sort of working sometimes. You just want to get it working enough, and you got to be okay with that. It's just you can't you can't control the market, unfortunately.
Gotcha.
Is there
Thank
anything you
you.
wanted to touch on? Anything else?
Uh, I think I've asked a lot of things, though. I did have a note here that I wrote to myself with the statement that you had in the uh pricing on TFT. We won't let you lose your trade in 3 days or something like that.
Mhm.
I wanted to clarify, like, what does that really mean?
So we have our daily loss limit that won't fail you if you hit it. Again, we recommend not using it unless it's an emergency, it hits it. But that's 40% of your account. So just naturally, if you had it would take 3 immediate losing days in a row before you lose your account. And then once you've failed your account, we're not going to let you reset until you've taken the rest of the trading day off. So that's built into the system. So essentially, other systems will let you reset 30 times in a row in the same day, right? And everyone's like,
Mm-hmm.
well, I'm not that person. I'm not going to do that. But we've seen we know what people do in the space. Well, let me just reset one more time. Oh, I know what my problem is. Oh, I want to catch this trend. And it's not healthy. You can't just reset your live accounts. It's not something you can take with you. You can't just blow brokerage account after brokerage account and survive the market. So naturally our system, takes 3 to fail and then another day before you can even reset. So it's protecting you from yourself.
Gotcha.
Yeah, and then I'll just jump in real quick. So here's the thing with these programs. Generally, they create a condition in which, one, they give you way too much leverage, right? And it's beneficial for them as a company to give you way more leverage than you actually need. Why? Because in most cases, instead of taking correct risk trades, smaller size trades, you're going to take way too big of trades. And what do? You blow your account. What do you do when you blow your account? Most of these guys go and reset it, right? It's basically gambling. That's what it is. With us, we've limited our sizes, and I know our sizes for some of the accounts are a lot larger. And we had to balance that because, look, we have scalpers, and if we give a scalper like max of 3 contracts, it's not going to work for him. It just doesn't, right? But with the daily loss, I know a lot of people are like, oh, I don't want a daily loss. That's, I don't want that. It's like, yeah, they rejoice when people remove daily losses as an assessment. But then you're blowing an entire account in one day. How does that translate to a live brokerage account? You should not be risking all of your capital on one day. Like, you can have a bad day. You're going to have bad days. So why would we let people, traders, we're trying to protect traders, allow them to blow up their entire account one day? We don't, because it doesn't help them. It hurts them significantly, right? So the 40%, which is like, that's what we let you risk, is actually too much. But if we limit it even more, then people are like, oh man, you don't give me enough room, and da, da, da. But in reality, what they should be risking is about a 1-to-1. And they should not be risking. And if you read all the books, what do they tell you? Don't risk more than 2% of your account. These guys are literally risking their entire account in one day, right? That's not sustainable long term in the brokerage account, period. It's not. It's not. If you risk your entire account every single day, you're going to lose your account, right? So what we're trying to do is enforce and instill good habits and good risk management from the start, and then carry that over. So having the daily loss limit the way it is, it's actually helping the trader, not hurting them. If we removed it, I'm sure people would be like, oh my God, it's just amazing, no more daily loss. But in reality, all they're going to do is blow their account, right? It's not teaching them correct risk management. It's not teaching them what, us as a firm is trying to achieve. Like, if you get into our account, and when you get into our account and you're trading our capital, you're our partner. We do not want you risking all of your capital in one day. You're going to be placed on timeout if you do that. You're going to lose the account and be like, no, we don't want you to trade with us anymore, right? So those are the reasons those rules exist. It's for the long-term sustainability of the trader, to encourage good, proper risk management and all that stuff. So I just wanted to touch on that, explain a little bit more, and show you that, like, we thought about this stuff and we want long-term success, not short-term. Yeah, you got past the assessment. That's step 1. Step 2 and step, through 15 is, how do we keep the account and make sure you continue to consistently pull money out of the market? And that is through really good risk management, not a lucky streak of wins, right? It's through proper risk management and playing the numbers long term, not short term.
I was going to jump in and say to everybody who's watching, the giveaway we'll be doing soon. So just in the next few minutes, go ahead and sign up if you haven't already, and we'll go ahead and have Raj jump in then and spin the wheel of fortune. All right, let's answer some questions, and Zero, you can jump in anytime you'd like.
Okay. I just have a question, if I understood the daily loss correctly. So the daily loss is the full risk. So if I take 10 trades, I divide the daily loss by 10, and that's my max loss per trade.
Yes, that would be a great way to do it. And you can You can actually, we have inside our trading desk, inside our software, you can pull that up and kind of gauge where you are on that daily risk up there in the corner. Brian's pulling it up on the screen.
And just to let you know, on the daily risk, the DLL is not what you should set your stop to. That's 40% of your account. It's an emergency stop. Do not use it as your calculation for your actual stop on the day. You should probably be risking about 20% of your account per day in an assessment, and then once you're in the brokerage, it should be a lot less than that, right? Because you're not giving yourself enough room to be wrong. So if, let's say, you have a strategy that's 40%, 50%, whatever it is, and then news comes and it messes up your strategy, and something else happens, or you fat finger it, you're giving yourself such low margin for error that you're going to blow the account. And then once you get into that drawdown state, now your emotions come into play and you're giving yourself no room to be successful. So what I would recommend is figure out what 20% of your max drawdown is, right? Which normally it's 40%, and either make it 1-to-1 of what you could potentially earn in the day, right? With proper risk management, or do a smaller number. Less is more with trading, right? Until you get a good solid cushion, because without a cushion, you're going to trade much differently. And if you always feel like you're almost going to be out of risk, right? Your account's almost blown. You're never going to be in the right headspace to actually trade efficiently. So when it comes to the daily, the DLL, which is a soft breach, don't use that as your stop for the day. Use like half of that. And that will put you more in like a 1-to-1 situation where you're not risking more than you can actually make.
But I think you had the right idea. So you were taking your daily loss, dividing it by the typical number of trades you have. But what Brian's saying is don't use the entire daily loss. Again, that's sort of like an emergency daily loss stop. So just dial it back a little bit. Learn to stop before hitting a daily loss, a hard daily loss, I should say. So maybe a couple trades less.
Gotcha. So
Either a couple
there's
trades
like
less
this.
or less risk per trade.
Okay. Gotcha. So say we use starter settings. So 1% of that is 20. So we're going to look for trades that earn 40 to 60.
Order field.
Did you catch that, Brian? Sorry, it broke up for me at the end.
Yeah, so let's say your total risk, your daily risk, right, is $1,200. You're not going to want to risk $1,200 because that's basically 40% of your entire account, right? You're going to want to set something below that amount. I would say $600, probably half of your daily risk. And then you take that, which is $600, and then divide it by how many trades generally you're taking per day. So if it's 3 trades, then you can risk how much? 200, right? Or if you're taking 6 trades a day, then you can risk $100 per trade. And that's how you figure it out. And then based on your stop, you can figure out, okay, well, if my stop is 2 points and each tick is this many, then I can take this many contracts. And that's how you figure out your risk very quickly. And we do have a risk calculator, which is here.
Okay, gotcha. That's cool. It's really nice. So my husband built this Excel thing. That's where he does all his stuff.
That's
So
where
this
we
is
all
really
started.
useful.
It's where we all started, and that's why what we built was actually something we would want to use, and what we do use, right? It's a tool that we wanted, but it wasn't there, right? So
Yeah.
having all this stuff, and it's only going to get better. We're always adding new features. We're always coming up with new ideas, and the vision for us is making a space where everybody wants to just be there and talk about trading and share ideas and get coaching and everything all in like the Facebook of trading. Basically, that's kind of what we're trying to gear towards. We'll see if we get there, but we're always pushing value and as much value as we can offer traders and as much help as we can offer traders, because trading is very hard.
That's awesome. Oh, will you allow swing trading
Not
at some
currently.
point or no?
Okay. Initially when we started developing everything, we did want to offer swing trading accounts. Those accounts, we may eventually offer something. Those accounts, of course, will be much smaller size because there's margin that we have to take care of for overnight, right? Because you have to have the right amount in the account, or else you can't have it, right? So we're considering it. I know some other firms do it. We may end up there, but for now, it's not really in the near future. So I don't have any timelines for that.
Gotcha. Thank you.
Yep.
All right, I'll let if Raj is listening, I'll let him hop in and do the raffle. Oh, there it is. Okay, so we're gonna give out. I don't know. What did you promise publicly? Anything yet, Raj?
I don't think so. I think
Okay,
it
let's
might
do
have said
two.
two.
Let's do two. We'll do the first. We'll do the two assessments credits. So we'll give you $150 for each. Yeah, 10 $300 credits. We'll give you $150 twice for who two different people. And then you know what? We'll let's do 5 more spins after that for free practice accounts. So people can get in there and use it to forward test. All right, Bob. We will send you an email with that $150 credit. Need some music.
Can you hum or something, Josh? I think that would work.
No, then everyone would leave the stream. Hoodoo, congratulations on that $150 credit. We will send you an email. We've got it. And then the next 5 are going to be practice accounts. So we'll give you $20 credits, and you can. That's enough to get a month of a practice account for free. Raj, that's got your name in it. You want to pronounce it for me?
It's got my name in it. Govinandraj.
Okay.
Govinandraj.
Okay. Cool. That was for practice account number 1. Mohammed, congrats. You get a practice account. And again, if you do happen to pass that practice account, no pressure to do that, but we will give you a 50% off towards an assessment. So it's we think it's worth people's time, even without that, just to make use of our stats and our journaling. Was this number 3?
Yep.
Kelvin, congrats. Diana, practice account for you. Come on down. And the last one is Josh. Hopefully that's the Josh that was begging for free stuff, because Josh, you just got it. All right. We have time for a couple more questions if we have any serious questions. Art Vandelay likes the Seinfeld reference. Give me 10 straight, T-Lal. That's a great idea. 10% total drawdown available is a good starting point. It's better than what most people are doing. So I think what people don't realize is they're trying to maximize over leverage because they feel like it's right in front of them. They're like, oh, I just, I'm really good. I can trade 8 minis and, I can have these big days. But what's happening? You're just failing. Yeah, okay, you failed 50 accounts and then you took one $5,000 payout from somewhere. What have you really done? You've lost $100,000 in virtual drawdown to make $5,000 or $10,000. Is that anything that you're building? Is that going to be a good habit? Is that going to help you sustain? Probably not. So really separate yourself from the carnival games that are going on and something that you can do for a long period of time in a real brokerage account. Again, we'd love for you to trade with us, but at the very least, think of your own personal account and what you could be doing there and the bad habits you might be building at some of these sim funded companies. Yeah, so hopefully everyone who got a practice account makes use of it. And if you didn't, feel free to sign up for one. They're just 19 bucks. And that gives you access to a trading platform, all the journaling capabilities and reporting capabilities that we've got, and all the new features we're building for that. I just wanted to mention one more thing we announced yesterday. If you choose Rhythmic with us, we are paying for a license of Trader. That's TRADRR. And that integrates fully in our platform and is really great for advanced traders and traders of order flow and DOM. And Niels is in here, and he's in our Discord as well, and you can ask questions there or in their Discord about that, but we're really excited about that partnership. But I think that wraps it up.
We've got a few more questions.
Okay.
I'll just put them on the screen for you.
Sure. Can you be more specific about the live account? So just naturally, you're either participating in an auction or you're not. And if you're in a simulated environment, which a huge portion of traders that are in kind of these programs are used to trading in, you're naturally just going to have different fills. There's a simulator, and then there's real live auction markets. When you place a trade in a simulator, you have zero effect on the market. Placing a trade in a live market naturally will have a different effect on the market just by observing the market. You're not changing it, but by participating, you are. Even a couple contracts, I understand it's almost always going to be very negligible, but that's a starting point of why things start being different. Another aspect of that is, yes, your fills. So simulated environments like Rhythmic or Tradeovate or any of those companies, they're doing their best to predict what would happen if you're executing orders on the market, but they're never going to be one-to-one with what actually happened. Larger size especially, you'll see more slippage with larger size, except larger size when you're doing market orders or you have stop orders, you might get skipped. Live markets have a couple different queuing systems, and those aren't for who gets filled first based on who's on the bid or ask. And those things aren't emulated 100% in the simulated environments. So there's a lot of little differences that add up. But the bigger point is people that are trading 20 accounts with 8 contracts each, you're not going to get, it's going to be wildly different experience, not just emotionally, but just based on trying to enter with that many contracts, especially depending on the market you're trading. You mentioned ES and NQ. Obviously, you're not making a huge dent with the amount of liquidity there is in futures markets, especially in the equity futures markets. But you do need to keep that in mind that you probably will not have the same experience. Not to mention if you're flashing orders, pulling the bid off, those kinds of things, those don't get you in trouble in just simulated markets. And when you're in a live market, you might get an email from the CME saying you can't be trying to manipulate the market by putting orders on that you don't have an intent on filling. So lots of differences that add up in live markets. What is the profit target for both the stages to move into live? So the first stage depends on you and the plan you picked. It's directly correlated with your drawdown. The profit target is roughly 1.75 to your drawdown of 1. And when you pass the assessment, you then need to reach a point where your drawdown essentially hits 0, which is reaching the profit that's the same amount as your drawdown. And once you do that, we move you into the live brokerage. We start you at that same balance of the same amount of the drawdown, and we enable payouts. And you can take payouts into the buffer as you'd like. You can take daily payouts, and there's no cap on how big that payout is. We're excited when you take a payout because we start getting a cut of that as well. It made that. Sorry, Niels, but yeah, I think daily loss is really annoying until you hit it and it saves your ass. So I'm glad it caught you. Oh, if you have a system that might only be give 3 to 5 setups a week with 2 to 3 trading days a week, sometimes potentially 2 to 3 tradings a week, would that limit the move to live? Absolutely not. Patience is key. We want you to trade as slow as you want. If you want to get to live and be like, look, I just want to trade 1 micro and sit in this account and just trade well, we'll go, okay, let's limit you to 1 micro and just take your time. Obviously, if we don't see you trading for a few weeks, we're going to reach out and be like, hey, are you still there? You are just sitting on our margin. Would you still want to trade this? Do you want to just cash it out? But trade as slowly as you want. If you have a system that works, that's what we're looking for. We can help you scale that up and end up with the same kind of gains that you can get from some sort of strategy that you're trading 10 times a day. We change the parameters. Yeah. So the practice account, what's really cool is go in there, build the plan exactly how you want, and then you'll see one of the options on the plan builder is ineligible for funding. That'll turn it into a practice account if you hit no. And you can choose any combination of a plan when you're building your practice account. You can't change it after you've created it, if that was your question. But yep, you just use the normal plan builder and then just say, okay, I want a practice version of this. And it'll drop the price there to $19 if you're using the TFTX platform, or $39 if you're using Rhythmic. And that just pretty much covers our costs for platform fees and a little bit of customer service. Art, yep, again, great Seinfeld reference. My personal DLL is 10% of total drawdown available, 10 straight daily loss days, which is great, especially depending on your strategy. We're trying to build something here where people stop blowing accounts, and Art's got the right line of thinking to make that happen. And those are the kind of traders we want. How many traders can we keep and sustain and become consistently profitable? We all want to grow together and just build a really good core team of risk management traders. This is the most humane behavior I've seen. I appreciate that, Shervin. A lot of people struggling in our background is seeing people with problems and trying to help them. And it seems so obvious to make a company with values like this. I don't know why, traders put up with the way they get treated at a lot of companies. And I hope we set a new bar for what should be expected from your prop firm, not just a company where there's always, the first step to pass your test. The second step, you pay more money than you did in the beginning. And then the third step is that they don't mention that's part of the process is begging for a payout. That's what I see all over the place. Wish me luck. I'm going for a payout. And then you don't even know if that's going to work because it goes against their bottom line. It's not the correct business model. And I imagine the CME is going to come for some of them and or CFTC in some way in the future, but we're pretty optimistic we're going to dodge anything like that, especially since we're probably I think we're the quickest company in the space to put traders in real live brokerage accounts. We get you in there as soon as 6 days after you sign up for an assessment, assuming you pick those plan parameters and you pass that quickly. But again, we're trying to get people in brokerage accounts, so we're on their side and we're just teaming up. So let's do this together. How do you backtest, Jeff, on TFTX? So TFTX doesn't have a way to get to replay the market automatically and not show what's ahead of it. I don't think, or maybe it does. Does it have that same feature like TradingView?
I don't think they have that yet.
Okay. But what you can do is, can you pull up TFTX?
Yep.
And then.
So you're talking about like just.
Yeah, I don't think they have a
Going with
replay. Yeah. So what I would say is open the market, flatten it out like he did so you can't tell what's going on. So the market looks like zero volatility. And then just scroll back really far. and do your best to ignore the date or what you think was happening that day. Hopefully it's not a day you remember and you don't have a photographic memory. But start the day at around 9:30. Don't go to the right yet. Okay. Do an analysis that you would normally do. Pretend it's a fresh day, 9:30 in the morning. I'll sit at night and do this for 2-3 hours in a row, day by day. I'll analyze the day, put all my levels around, look for my strategy. And then if you hit the right arrow, I believe, it'll go bar by bar. So go bar by bar and make your decisions. Unfortunately, you can't, since there's no trades being taken, you're not going to be able to back test like this with statistics or our statistics in mind. But what you can do, Roger's going to show you, you can use the P&L tool inside of the platform to draw where your entry would be and where your stop and take profit would be. So just do your analysis, plan your entry, like let the market play out by hitting the right arrow key, and then yeah, see if you can take your trades and start writing this down, and use this for research and for really ironing in what you're looking for in the market. It's kind of a two-phase thing. It's never as good as forward testing, but you can really hyper improve your strategy and your headspace of what you're looking for by doing that in high repetition. And practice with Rhythmic. What platform can I use? So Quant Tower has a free version that works with Rhythmic. I would recommend that. Or people kind of knock it and it's got its issues, but our Trader Pro is included and it's got a decent DOM, and it does have charting capabilities. So it's got indicators, charting capabilities, the DOM. The DOM has a TPO on it even. So I wouldn't completely throw that out for a Rhythmic client. But if you do get a regular assessment with us, we do provide the Trader platform. If I make it to live, is it possible to have a live account with Trader Video Ninja? So not right now. So we have not announced any partnership with Trader Video Ninja Trader, but we do sort of have a workaround there. So if you have the ETP trade copier, which we're going to be providing a license for you if you need it on the Rhythmic side, within probably the end of this week, you can use that and basically install their NinjaTrader add-in and configure ETP's trade copier to copy to us, and then you can use that NinjaTrader platform to trade with us. All right. Okay, I'm gonna go get some lunch, and we'll be hanging out in the Discord. Feel free to ask questions there, and congrats to everybody who won.
Thank you, guys. The links are in the description if you want to join the Discord, and we'll see you there.